Perfect. All right, I started this up over on Facebook, the Zoom. Everybody's coming in. Let me do my layout so I can see the speaker, which I see Matt. My internet connection is unstable. Can you hear me okay?
Yeah, we can hear you. You look, it's fine. A little, it says that you have full bars, but
Okay.
everybody good? Happy
I like your hat.
Monday. Happy Monday. Where you at, Mark? Where you at today?
I am in Vermont today.
Vermont. So you went from one side of the country to the other side.
I did. That's exactly what I did. So I was actually coming back from, actually, I was in Canada, I think. Where was I last time? I was in Canada? Yeah, I was
Yep.
in Canada. Um, and then we drove back, then I'm in Seattle. So from Seattle to Newark, we're flying and we're going to go into Cape Town, South Africa. But I got a message that a really close family member passed. So I'm like, you know what? You go on to Canada, or I'm sorry, you go on to Cape Town with your girlfriend, and I flew up to Vermont. So I'm up here in Vermont, and I don't know when I'm heading back. I thought it'd be cooler up here in the Northeast, but man, it's hot.
It's hot everywhere right now. I feel like it's not as hot now, but
It's like
so you're
that it
so
is.
you are
So
you heading to South Africa next or
I don't know. I don't know yet. I'm in the air. You know, that's the thing with me. I always wing it, and I'll decide a couple days before what I'm doing a lot of times this time of year. I just go with the flow and just kind of enjoy things and just kind of enjoy it that way. So hopefully you can uh hear me okay because this keeps popping up that I have a low bandwidth.
yeah, we hear you fine.
Okay.
Yeah.
Let's bring
Yeah.
some questions on. How about you, Matt? What's going on with you?
Oh, not much, just staying busy, doing a few different things here and there. It's been good, but let's hear about everybody else too. Everybody, where are you from? I'm here in Cincinnati. So it's actually kind of nice here. We got George. What's up, George? Where you located, George? And
Hello,
then
I'm from. Oh, sorry, Matt.
oh
Hello,
go
I'm
ahead.
from Dallas, Texas.
Dallas,
How
Texas.
you doing?
Nice. Do you like Dallas, Texas?
Yeah, so far so good. I've been here for about 5 years. It's pretty cool.
Okay. Okay. Awesome. Mark, what do you think about Dallas, Texas? It's pretty good, huh? It's huge.
Where's he? He cut out.
Dallas,
Texas?
Texas.
Yeah, it's a great market. I like that market, especially the northern part, Plano area. Well, actually, there's a lot of markets in Texas that's good.
Okay. Awesome. Well, guys, I just want to welcome everybody in. Oh, we got Laura from the Tampa area near the Gulf. Awesome. I love it. I love Tampa. I'm a big Tampa person. Awesome. All right, if you're over on Facebook, welcome in. I dropped a link for you to join us over on Zoom as well. So feel free to hop in. We got people hopping in now. It looks like they're coming in over from Facebook. Welcome in. We are over on Zoom, so feel free to drop your questions over here on Facebook and or Zoom. We prefer Zoom. That way you can hop in and actually ask questions. This is a free coaching call for you to take advantage of a multimillionaire that is crushing it in the real estate space for creative financing and just real estate in general. Mark, what experience do you have? You have some pretty deep experience.
So hopefully I understood your question, but I've been in it a little bit about myself, I'm assuming. I've been in the business 30 years, started in 1995. I've done well over 3,000 single families, commercial deals, land developments. I love buying through seller financing strategies and selling through seller financing strategies. And actually, one of my properties today, I had an offer that came in. So we're still in the negotiating. So I really don't want to sell it. It's a 7 unit. I bought that 7 units with zero down. Um, but it's a balloon coming due, but the balloon's still not for a few years, but we threw it up there and we had an offer. It's coming in right now. So we'll just kind of, see what we're going to get on that deal. So, and it cash flows really well. It's just, so, but I like it. I've been in business a long time. Like I said, I like buying. My niche is, well, first of all, my niche right now is I'm buying mobile home parks. But when it comes to residential, I like buying through seller financing with a low down payment, direct to seller. It's hard to get deals through wholesalers because their assignment fees, and then they don't know how to negotiate a good enough deal with a seller. So their entry fee is a lot higher. But if I go direct to seller, I can get in with a much lower fee. And then what I like to use, and then sell it through like a lease option or an agreement for deed. I get them to my end buyer put a larger down payment. So I use my buyer's down payment to buy the property with a seller. And then I usually have money up front too to get in a deal because I want to make sure I have money in reserves. So if anything ever happens, I had the money in reserves. So typically I buy through seller financing, sell through seller financing, get a nice down payment up front, cash flow minimum of $500 a month, but I have a lot more than that. Upwards of like, I have one deal, this one I'm selling, I'm cash flowing about $4,500 a month. And I don't know why I'm selling this thing, but my partner wants out and we looked at refinancing it, whatever it may be. And then, but usually I look for a minimum $500 a month cash flow. And then I usually have an exit in about 5 to 7 years because then I want to sell it. And typically when I'm selling it about 10% above the value. So that's a little bit about me. So Matt, can you hear me okay? Am I
Yeah,
cutting
I
in
can
and
hear
out?
you fine.
Okay,
You're good. So why? So you're selling a property that you don't want to sell?
correct. Because my partner wants it and the rates don't make sense when you refinance it. Because I have a really low interest rate on this thing. It's a 4%. And but it's appreciated quite a bit. I'll be able to take that money and just redeploy it. So I don't want to sell it, but I'm okay selling it because I can take that capital and I'm going to walk away with a few $100,000 and I can buy probably another easily 10 properties with that money. So if not more, I mean, probably close to 20 properties because like I said, like to get in with low down payments. So my return on this one's going to be infinity because I didn't cost me anything to get into it. We closed on it August 30th, and 2 days later we collect a little bit more than. There's a couple other properties tied to this project as well, but we closed on August 30th, and 2 days later, September 1st, we collected a couple more than $10,000 of rent payment. So technically, it cost me $4,400 with closing costs, but I got that back.
Okay, awesome. So we got some questions filling up in the chat here. You ready?
Bring them on.
All right. How do we find seller financing properties or a property that is a good fit for seller financing?
That's what this whole topic is about. How do we find sellers that are open to creative seller financing? So this is going to be a long topic here for a minute. So for me, they're everywhere. But typically, my model is I have bird dogs. And does anybody here know what a bird dog is? Is there anything in the chat? Nobody knows what a bird dog is. Okay.
People looking for houses.
People looking for houses. Exactly. Yep. Scouts. Yep. You got it, guys. So a bird dog is somebody that refers deals. For example, trashmen. They work the neighborhood. They know what homes are moving out, what homes are sitting empty. Trashmen, landscapers, snowplow removals. I just got a couple deals from a pest control guy that I just connected with a couple months ago, and he's been feeding some deals over. So pest control, Uber drivers, Amazon drivers. I used to get a ton of business from mailmen, but for some reason, something must have happened. So they're no longer sending me deals. I think something happened internally. But my home run deals come from hospice nurses. So that's where I get some really good deals. So I have bird dogs that come in. Hospice nurses are laydowns because I don't have to sell them. They're usually calling me. The hospice nurses, I'll pay about $2,000, maybe $2,500, depending on my spread. The other people, I'll pay roughly about $500 on a closed deal because we have to chase them down. So I have a system set up. They take a screenshot on Zillow, wherever it is. They text it to this phone number. It goes to one of my VAs. Then my VAs tracks down the homeowner. We use Deal Machine because Deal Machine is great because it also gives LLC's phone numbers. So we track them down and see if they're open to if they're open to selling. Sometimes it could be cash, but most of the times I'll do seller financing. So in my offers, I always do a cash offer or a seller financing offer and give them the option. And a lot of times they're going to go with the seller financing offer. So that's kind of the route I tend to do on that one. That works really, really good. on mine, and it starts snowballing. Once they start making a little bit of capital, it keeps rolling and rolling and snowballing. So, and I like that because in direct to seller, there's no realtor involved, but I do work with realtors. I have some realtors. I did 18 deals with one realtor one year. I like realtors. I love rental realtors because the rental realtors are used to making 1 month's payment in their commission. So they'll be my boots on the ground. So I like those guys. And typically I dumb it down and I make it really simple when I'm talking to sellers or reaching out. I say to the seller, well, let me back up. I'll get to that in a second here. But when you're doing seller financing, when you're talking to a seller, you have to remember it's like a marriage. You're in a long-term contract or commitment with the sellers for whatever the term is, 5 years, 7 years, 10 years, 30 years, whatever it may be. So 80% of my phone call with the seller is really building rapport, building a relationship. I want to get to know them and I want them to get to know me. So I want to know each other. And that's the reason why they're going to do seller financing, because they want to.
Uh-oh. Looks like we lost him that time, didn't we? Well, I know what he was talking about. He was wanting to really talk about building the rapport between you and the seller. You are providing the relationship. You got to really make it a relationship on all aspects of everything. Um, the relationship side of things is like the key point of that side of any transaction. That think of that as a oh, here he comes. Let's let him continue. There we go. You're back.
All right, I'm going to use my phone.
Okay, you're good.
Probably lost Facebook though.
Yep, you just keep going and see what happens.
All right. So let me,
Oh, muted the wrong one.
can you hear me okay?
Yep.
Okay. Sorry about that, guys. And let me get my camera on. I had a feeling it just showed bad reception over here. So I'm, oh, whoops. My camera on. I feel like bad reception. Oh, whoops. All right. I'm on my phone and the computer, but I don't know if Restream's working. You possibly could do that, Matt, if you want to.
You're good. You got it.
That's what happens in Vermont, that type of situation. So yeah, it looks like we're still are on Facebook. Interesting. So that's cool. So back to, I don't know where you lost me, but I was talking a little bit more about when you're talking to sellers, you have to treat it like a marriage. So that's one of the biggest things that you have to. So when you're talking to the sellers, building rapport with them, it's all about getting to know each other. I want them to know me and I want to get to know them. So it's all about building that type of relationship to make sure it's working correctly. Whoops. So when I talk to sellers, I'm building rapport. There's two things I always want to know. Why are they selling and what are they planning on doing with that capital? Because if you understand those two things, then you can be creative enough to be able to solve the seller's problems. So I always want to know that. That's the first two things. And that's whenever we analyze deals and we bring them into the group and we analyze them as the mentorship, we're always talking about, we break it down and we find out why they're selling and how do we come up with a solution. So, and one of the things I love asking the question is, would you be willing to rent the properties for a few years and then we'll close on it and we'll take care of the maintenance and repairs? So if they do that, whoops. So would you be willing to rent the property to us for a few years and we'll close on it, we'll take care of the maintenance and repairs? And if they say yes, then I know they're going to be open to some type of creative terms. So that's that's the simple question, because a lot of times people are getting into say, hey, would you be doing seller financing? Would you do a hybrid credit? And it's confusing the seller. So if the seller's confused, then they're not going to end up doing the deal. I had one where I said, hey, would you be open to doing a lease option? Right? This was many years ago. And she's like, I don't know if I'll be open to that. Then later in the conversation, she goes, well, I would be open to rent to own, which we know it's exactly the same thing. So, so that's kind of why I like to dumb it down. So, Matt, you still can hear me okay? Am I still here? Okay. I can't hear you though, but hopefully.
Yeah,
Okay.
you're good. Sorry, I was on mute.
No, don't worry about it. I just want to make sure. Cool.
Awesome. All right. We got Amanda over on Facebook. Are you using leasing agents?
Yes, like rent to own agents, yes. Usually, and I like to buy properties, nice homes in nice neighborhoods. I don't like to buy properties in rough areas. So yes, I definitely do that. I use leasing agents. That is correct. Um, rent to own, yeah, because a lot of times these people are trying to sell the property and they couldn't sell it, so they have to switch it to renting. So those are the great ones, because they're open to it. And then the agents, they're used to making 1 month a little bit of less of commission. But sometimes I will pay an agent a little bit more because they have my boots in the ground. They do a lot more work, and if you take care of them, they'll bring more deals to you once they understand your motto. So yes, I do use leasing agents.
Awesome. All right. So we got George that has a few questions. George, let's go ahead and knock out one or two of those right now. You able to hop on here and talk a little bit about them?
Yeah, sure thing. I can talk. Sorry, I just jumped in the car. I'm just driving, but I can definitely talk.
All right. What questions do you have for Mark?
So I'll give a little bit of a backstory and thank you guys for the opportunity to meet with you now and just discuss this a little bit. I'm at almost zero. I don't know much about seller financing, but I'm very interested. And I was presented with an opportunity. So I live in an area where there are many different condominiums. One of the owners posted their condominium online. And when I reached out to them, they said that they would be open to seller financing and they wanted to schedule a call with me today. So I have some ideas of how to structure the deal. I was already talking about percentages up front and wanted to know if they accept the offer that I extend, what to do then. What are the next things to do? How do I make sure that the
So
titling and everything's clean? And
yeah,
all,
what I would do is usually I'll use a state contract. And then in the special provision terms, I'd write out all the terms in the contract. That's usually what I do. And then tell them, hey, if there's anything missing, we may have to just do an addendum. And then once you have that signed and you have a commitment, then just bring it to a title company, and then the title company can review, let you know if there's anything off or anything changing on it. But just build a rapport with them, get to know them, really build that relationship, and just get to know on a really good level, because especially if you need to go back and anything just change, you have that good relationship on them. So that's what I would do. I would get a state contract, whatever the price is, whatever the down payment is, whatever the terms, spell it all out and just say, hey, you know what? We're putting this together. We're going to give it to the title company, closing agent, and if they come back to us, they may adjust it. Any type of situation on that. So do you know if there's a mortgage on the property?
no, that's a great question. That's actually my next question. How do I look up the lien and the property? The way I found that they were selling was on Redfin, and then I used the DCAD website for Dallas, and I found who the owner was, and that's how I contacted them. So I did a little bit of sleuthing, but I'm not sure how to look up further for the actual property itself.
So I would ask the sellers, is there any mortgage on there? You know, straight up, because it's all going to come up when you open title with the title company, they're going to do research and everything's going to come up. So that's how I would go into it. Like, hey, is there any? I think we use Deal Machine. Matt, do you want to pop a link down there, like for the one? And I think it's like 7-day free trial, and you can plug the address in. Let me see if I can do it. I'm on my phone right now. I can, if not, I'll put it in the chat afterwards. There's a link, and I think you can sign up, and it's like 7 days free or something like that. You get all these different things. It's a promo that we have, and then you can just look it up that way, see if there's any mortgages on there. But I would ask the seller too, is there any mortgages that are going to be on there? And then also never give the seller direct the money. You always want to give it to the title company if they're looking for a down payment. So just be very cautious. But you look them up so you know they're legit, they're the real deal. But sometimes there's a lot of like people that you gotta be careful. Oh, send me the money directly. You always want to go through a title company or closing agent. But that's what I would do. Build a great relationship with them. Really get to know them. Have them know you, know your family a little. Let them know the story about you, because it's a long-term commitment. There's going to be times that you're going to have to communicate with things may come up over the years or everything like that. And then make sure you're going to be responsible for tax, insurance, so you get the depreciation, you get the deductions on stuff like that.
Oh, great.
So, yeah, so that's what I would do. And then also somebody put in there about an inspection, but have you walked the property yet?
It's down the block for me. I've seen it on and off, but I haven't been walking inside. I think that would have been the plan for today. Literally after I get off this call, I'm gonna get on the horn with them and I'll be going over some of the details. And if I'm in the area, I'll ask them to show it to me this evening.
What are you going to be doing with this property? You're going to live in it? You're going to rent it? What are your thoughts?
I'll be candid. I received a large tax bill last year, so I'm trying to get as many assets as I can to reduce my taxes. If I could rent this and then depreciate it, it'll help me a lot with my tax bill.
I totally get it. I have a lot of people that that come in to the program that make $200,000, $300,000, $400,000 a year, and they just buy properties a couple a year for the depreciation to offset it. So you want to make sure you run your numbers, what the payment's going to be with the seller, your tax insurance, and any HOA, and make sure that your rent's going to cover. You want to do that. That's one of the things we do on Tuesdays. We do a deal analysis, make sure numbers. For me, I look for a minimum cash flow of $500 a month. That's my model. Also, you want to make sure there's no special assessments coming up in the HOA, and make sure that you're allowed to rent it out immediately. Some HOAs you have to wait 6 months to a year before you can rent it out. So just do your due diligence, and just also in your contract, make sure you do like a 45-day due diligence period or 30 days, something like that, so you can do all this stuff. So as you're moving along through the process, and like if you're doing an inspection, I recommend that. For me, I know what I'm looking for nowadays, but if you don't know what you're looking for, I'd recommend spending a few $100s getting an inspection done. Look under the windows. You can also, chat GTP, you can throw, hey, give me a checklist of items I should look for in an inspection. So when you walk the property, you can kind of keep an eye on it. The big things is the roof, but that's the HOA, the HVAC, hot water, electrical, the big expensive items. I also look for water damage. Look at the ceiling, I look under the windows, I look under the doors. But if it's your first one, you may want to look at getting an inspection done. But I've done enough deals, so I don't need it anymore, unless it's an older home and the foundation stuff. So I'll look at it and get an idea. And if I see something might be fishy, I want to get an inspection, or I get for me, I might get a GC out there to look at it and see what it'll cost for certain things. But if you're new at it, I highly recommend getting an inspection. So make sure you do an inspection period so you can get out of your contract if something comes up as you're doing it moving forward, as you're doing your due diligence and research on the property.
Excellent. Wow, you guys really shared so much knowledge with me. Thank you so much. Thank you, Mark. Thank you.
Yeah, good. Congratulations. But how did you come across this deal?
I was walking down in my neighborhood, just doing some laundry, getting a little bit of exercise, and I found that they had a lock, one of those realtor locks that you have to punch the code in so you can do the showings. Then I said, oh, wow, they're selling this place. It's reasonable price, and I definitely think that the area is nice. It's very accommodating. They take care of everything for you. It's well kept. People would want to live here, and it's a great opportunity to kind of expand a little bit.
Yep. I'm the same way. On my properties, is it a property that I'll live in? I always look at it like that. Now, I do have some properties in some states where, like the multifamily stuff, I probably wouldn't live there, but I don't deal with it. I have a property manager, but I just make sure I cash flow really well. But I like most of my properties. I like in nice neighborhoods near nice schools, and usually children in those areas. So that's a little bit about how I do my stuff. So do you have any more questions on that?
I think the last question was revolving around closing, but I can definitely hit the ground running on that. Once I get with the professional, the title company, I'm sure that they'll help me piece it together.
Yes.
The tax and the insurance, should I set up an escrow account? Do you recommend this? Is there any advantage to it?
The seller, I probably would. I like to have it done and over with. Just it's all included. The seller's probably going to want most likely that. Well, I would recommend using a loan servicing company too. So keep that in mind, because then they'll be able to produce the proper documents that you can use for depreciation. The seller may not have those resources. So like Madison and Sohal's actually down in the Dallas area, I can give you his information. He's in the group here. The Facebook group is Sohal. He has a loan servicing company. And I would just have all the taxes, insurance, all sent there. They do the disbursements. And then at the end of the year, they'll provide the tax documentations, because sometimes the sellers, they have to get their CPA. It's done professionally. So you don't have It's in this way, and then they'll disperse the funds to the seller, and they'll hold the tax insurance and then pay that when that needs to be done. That's what I'd recommend.
Okay. Okay. Cool.
But
Okay. Yes, please.
have you ran your numbers? Do you know what the HOA is?
Yeah. It's the property is selling at 120. The HOA is roughly 400 monthly, which is expensive, but they do a reasonably good job.
Okay.
And I think we can put. I had someone lined up to put in the place for at least 1,300, if not more. So if I can go up from 1,300, it'll make sense.
Yep. And then your tax insurance. Now, keep in mind the property taxes are going to go up a little bit because that old taxes from the old seller. But it probably at that price point, it probably won't jump up much. But that's awesome. And make sure you're allowed to rent it. You don't have to live in it for a little bit. And so, yeah, I would recommend just doing what, just follow. This is recording too. So if you need to watch it again, it'll be under the event section in the Facebook group. I'm sorry, not the event, featured section. My apologies. So.
Wonderful.
Cool.
Thank you again, guys. Thank you so much.
Yeah, good luck. Keep me posted.
Sure thing. Thanks, Mark.
Cool. Maddie?
Awesome. We have Eric asking, do you have a program? Yes, Mark does have a program where he teaches everybody how to do seller financing from every strategy possible that is out there. A lot of them cover just one, but Mark's mastered many of them. I mean, he's done, how many transactions was it? 3,000?
Yeah, well over 3. Yeah. So there's so many different strategies. The big one, the buzzword everybody's called subject to. You have straight seller carry, you have sandwich lease option, agreement for deed, land contract, novation. So there's so many, and then the typical wholesaling, but I don't like to wholesale. I like to buy my properties and stay in the deals. It's just, wholesaling, I keep grinding it. I like setting up passive income. So once over 5 years, you can easily have 20, 30 properties and be generating easily $12,000 to $15,000 a month off of passive income using your buyer's capital. And then you just keep adding a little bit more each year. So I recommend usually a 5-year plan. That's typical. If anybody tells you can get it sooner than that, just be very cautious. But typically in the real estate game, you usually want to do a 5-year plan, no matter what strategy you're doing. That's the goal. And then after 5 years, you can be financially free. And that's your choice if you want to work and keep going. But that's the ultimate goal, is just making sure you set yourself up, learn the strategies, and do a 5-year plan.
Awesome. Below, I dropped a link just for you to schedule a call with our team to see if it's a good fit for you. There is no sales on this call. It's just a call for you to find out if it's a good fit for you. And we like to see if it's a good fit for you as well. We want to make sure that we can set you up for success and not for failure. So, all right. Yep. The schedule a call there. Just put it in the chat on both sides. Awesome. All right. We got Give them has a question. If you are doing a seller financing deal, do you let them know that you will not be living in it, but leasing it out?
Sure. Yep. I tell them exactly. I'm upfront with all my sellers. Again, it's like a marriage. When I'm dealing with sellers, it's a marriage. Would you hide something from your wife or your significant other? No. Or your boyfriend, whatever, husband. No, I'm straightforward. I tell them everything, and I tell them they don't have to worry about whoever I put into the property. If they stop making payments, I'm still making payments. I'm responsible. It's between you and me. And that's why I look for a down payment, a larger down payment from my buyer, because I want to make sure I have 3 to 6 months in escrow to make sure if anything does happen, that's there to cover. That's just how my model is. And then after I have some reserves build up, then I start taking some cash out monthly as in my model setup. But I'm always straightforward. I tell people this is what I do. It's a win. I help a seller out that can't sell a property, and then it's a win for my buyer, because my buyers, these are typically people that can't qualify for a mortgage currently. It could be self-employed. They might have run into some credit challenges, but we underwrite them and they have very good income. And I always underwrite them through a licensed RMLO, through a third party, to make sure they can qualify. That's just how I end up doing mine. And I want my buyers to buy the property. So let's say I'm doing a 7-year balloon with my seller, with my buyer, I'll end up doing like a 5 or 6 year. So it gives that extra window of a grace period. So if something happens, they can't purchase it, whatever it may be, if I'm selling it like on a lease option or something on those, it gives me a little bit of breathing room to kind of go through that. And it happens, when you do that volume, some of your buyers may not end up selling it. And quite frankly. And I tell the seller, like, hey, they're always worried, what if you don't make payments and you destroy the home? Well, first of all, that's why we have insurance. Second of all, these people that we put into homes, they treat it as their own property. I've had somebody that I sold on a rent to own, a lease option. He put a $7,500 deck on the property. You think those people are just going to destroy the home? No, these are higher end people. They're not your typical lease people that destroy the property because they eventually want to become homeowners on that property. And to be frank, that's for me, that's my biggest high is when my end buyers end up owning that property and it's in their name and I'm paid off and they're just so happy. I mean, it's a win for everybody. It's a win for the seller, a win for the buyer, and a win for you to be in the middle. But don't be greedy. Yes, you can make some really good money, but at the same time, don't be greedy. I had one situation a few years ago where I bought a property from a seller. She wanted 179 and it was a 30-month contract on that one. And I sold it to my end buyer for $214,000 on a lease option. And in my agreements, they were supposed to notify me 90 days before that they're going to end up purchasing the property on a lease option on that one. But what happened was at day 45, I never heard from him. So I called him up. I'm like, hey, you're going to end up buying this property. Do you want to buy it? He goes, oh, yeah, yeah, yeah. So now he breached the contract. Remember this now. So I sold it to him for 214,000. His appraisal came in at $264,000. I could have been a jerk and like, no, sorry, you breached the contract, but I wasn't going to do that to these people. They are really good people. Over 30 months, I only heard from them like 2 or 3 times. And it was a win. The seller got what she wanted. I got what I wanted. I made some good money on it. And it only cost me $100 to get that deal because I locked it up for $100 and I went out for my end buyer's capital and I made $8,400 in the front end, cash flowed. On that one, it wasn't a lot. It was about $350 a month on that one. But I also made it where I was getting an extra credit each month as I made my payment on it before. I was getting an extra credit, $150 to the purchase price. So you always want extra strategies. What is the worst? What did David say there? What is the worst case? Because I'm on my phone, so I'm having a hard time seeing some of the chat messages there.
No, I was just, Mark was asking, what's the worst case scenario for your exits?
You always
Awesome.
want worst case is you keep paying a seller and you have to boot the seller or your buyer out of the property. You have to go through a process. That's probably the worst case. But that's part of the game. You're going to have that will happen possibly sometimes. But if you get a large enough down payment from your buyers, you use that capital, and then oftentimes you can come out ahead. So it's worst case for a little bit, but if you can turn around and we put a new buyer in that property, a new tenant in there, a new seller or something like that. Or you can technically go to people like yourself and you guys buy default paper, so that's another way, like you can kind of get out from underneath it. So that's another way. So David buys notes and I know he doesn't, but I know a few people in his group will buy like even lease options contracts. So that's another whole game. Right now we're talking about the front end and origination, but once you understand all to originate, how to do all this stuff, you have another whole sector of learning what to do with those paper. You can create paper, sell the paper off, and just kind of rinse and repeat. There's some people that will structure loans like an 80-20 situation where they'll sell the first off or even lower like that. They'll sell the first off in the secondary market, hold the 20%, use that money to go buy more property. So there's another whole avenue once you get into the game and you have a really understanding how to originate these deals on the front end. So, Matt, we got more questions?
Yes, we got more questions. All right. Let's see. Let me pull it back up. There we are. Do you do inspections on seller financing deals?
It depends on the property. And it depends on the area. If it's an older home and they're known to have foundations, like say the Northeast, like up in New England, and the properties are like 100 years old and something like that, those I'll get inspections on. If it's something 20 years or less, oftentimes I don't get inspections, but I will definitely do walkthroughs. I have somebody walk through. I look at the photos and look at everything in videos. And then from there, I like to get feedback from my realtor. But typically, if you're new at it, you should definitely get inspections. But if you've been doing a lot of deals and you know what to look for, then that's a different story. But if you're new, I would definitely recommend getting inspections for me. If it's a home like 5 years or less, I'm not giving you want to do your own, but if it's 5 years or less, typically not. But You never know. I've been seeing some videos of brand new construction, brand new builds, and they have some issues. So just, look up the builder, do a little research on it, and, walk the property yourself. But if you're very, very, very new, I would probably recommend getting an inspection.
Okay, awesome. And then when you do a seller financing deal and there is still a loan balance, what do you do with that? How do you know if they actually will pay or continue to pay the mortgage while you are in contract with them?
All right, repeat that. Who's going to pay the more? Go back when I miss. Repeat that one more time.
So if you do seller financing and there's still a loan balance,
Mhm.
how do you do that? What do you do with that? And
Yep.
and then how do you know if they're actually going to pay that mortgage down?
Pay the mortgage directly. So on the 25th of every month, between the 20th and 25th of every month, the payment comes directly out of my account and sent directly to the lender. So I make sure it's being paid. What we do typically in the lender's portal, we go in there and create a new Gmail address for that address. So the seller has it, I have it, and my bookkeeper has it. And if I'm wrapping it, my buyer even has it because I want to make sure my buyer knows that that mortgage is being paid as well. So everybody's on the same page. So whenever there's a notice that goes out, everybody gets the email. So we set up a Gmail, and inside the Gmail, we have it forward to everybody that should be a copy on it. So, and if there's equity in it and you're paying a seller the difference, then I will, at the same time, I'll send a payment directly to the seller. So they're called hybrids as well. So let's say that you're paying the mortgage and then the seller's got $100,000 of equity and you're paying the seller another $500 a month. So one goes directly to the lender. So I make sure that's paid. And then I have a separate payment going out directly to the seller. And then I will use a loan servicing company if it's a seller financing note. And if I'm selling it on a rent to own, then I'll use apartments.com. So I use third-party systems to track everything. I'd highly recommend always using a loan servicing company. And if you're wrapping it, and keep in mind though, when you're wrapping it to a loan servicing company, you want to make sure that your buyer is paying that. And that could be like a $30, $35 fee. So, and if it's a smaller property, that could be really expensive, especially if you're trying to sell that note in the secondary market. That's what like the David knows guys do. They'll beat you up on that price and you'll take a hit on that. So just if you're selling it as a wrap, you can make sure you talk to the title company and then make sure that the servicing fee is kept in there. But I highly recommend always using a loan servicing company. And then if you're doing a rental, use apartments.com. They pull the money directly out of their bank account and it's sent. Sure, it may take you about 5 extra days, but who cares? You know it's coming in apartments.com is great because it sends notices, reminders. And if you're holding as a rental, you can use your tracking maintenance system in there too. And it's all free for you. And then I use them for background checks as well, apartments.com. If it's a seller financing, I always use an RMLO. But if it's a rental, then I usually will use apartments.com. Cool.
Awesome. All right. And guys, hey, feel free. We have about 20 minutes left. Feel free to ask any questions. We are here for you. Mark does have a program. If you are looking to learn more and you want to dive deeper into seller financing, whether you're an experienced investor that might have 3 to 5 units or 10 units or 20 units, and you're just tired of using that 20% down and constantly going back and forth to use the 20%, and you want to do some seller financing where you don't have to pull your credit or anything like that, feel free, schedule a call at this link below, and we will get you some info about the program and see if it's a good fit for you. We kind of like want to interview you to make sure that it's a good fit. We don't let just anybody in because some people aren't ready. Like some beginners, they don't understand real estate completely, and we're not here to help people that don't understand real estate at all. You got to have a little bit of understanding of it, and that's what we want to do is make sure we can protect you and your money, because we know we're not just any other coaches out there that will take anybody's money. We want to make sure we can help you. Mark has a lot of experience, and with that experience, he is looking to make people become wealthy and hit their goals. We need people that aren't just tire kickers. We want people that are actually going to be there to power through and push through it. So, Mark, you have anything else real quick on top of that?
No, it's exciting. Like just keep educating yourself and networking. Networking is huge. That's how you grow in this business. I was on a podcast about 2 years ago, and somebody asked me a question like, what is the number one thing that you learn in real estate that out of anything? And I immediately came to me in this business, your competitors, your competitors are your business partners compared to other industries. So, and everybody's always here to help each other out. If you don't know who the person is, just do a little due diligence, but start following people, get to know people. But you know, networking is huge. Like, I'm in another mastermind with like David David that's in the group right now. And that's like we do seller financing notes because we talk, here we're talking about on the front end origination, but there's another whole area where you can make even more money in this game. So just start learning. And then like Matt was saying earlier, so there's so many different type of seller financing strategies. And most of these guys out there will teach one strategy, like subject to or lease option. So there's different type of things like that. So George, good luck on that. Keep us posted. I know you got to talk to that seller, so I'd love to hear how that deal goes. So he'll get that deal. And it's exciting. And the deals are everywhere. Just listen to how he was walking. He was walking through his neighborhood and he saw a lockbox and he tracked the seller down and started talking to the seller and just felt building a relationship with the seller. So that's really what it comes down to is just picking up the phone, taking action, like what Matt was saying. I can't tell you, I've seen people. So in the beginning, when I started doing this training stuff, I used to do it for free. But what was happening was, and I was going to JV with people, and we brought 20 people in to the first, when we started this several years ago. Now the 20 people, only 2 people were doing any action, taking anything. So, and everybody else was kind of wasting time and energy. So that's why we put a little bit of a monetary expense behind it, because I feel if people have a monetary expense, they're going to take action. But you have to take action. That's the biggest thing. And think about where you're going to take. And, don't be afraid. I know that's the biggest thing. I'm afraid. I don't want to mess this up, like blah, 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 my contracts or this or that. It's just learn. And, when you fail, don't look at failure as a failure and quit. You learn from it. You look at failure as a learning experience. That's how I look at it. If you're not failing, you're not learning. Look at Elon Musk, how many times he failed with SpaceX. And that was a purpose where they're failing and blowing up those rockets. And, if you haven't had an opportunity, I would highly recommend watching his story on SpaceX on Netflix, like how they wanted to fail on purpose to learn from their mistakes. So, yeah. So again, when it comes to seller financing, when you're talking to the seller, listening to the seller, why they're selling and what they plan on doing, for me is like subject to. I don't know who here knows what a subject to is, but a subject to is you're keeping the mortgage in the seller's name and they're transferring the deed over to you and you own it. For me, if a seller is not financial distress, there's no way I'm going to pitch that strategy. Everybody's like in the beginning, like, oh, this is cool, I can buy a property, but most sellers are going to say no. So then you need to have a tool belt, and then depending on the tool belt, that I call it the different strategies. So then you use a different type of strategy. We still get the same deal, just using a different strategy, and there's several different ways of structuring it that way. So, anyways, do we have any more questions? Ask some more questions in the group here.
We got one more question. If you're doing a seller finance deal and insurance says it's time for a new roof, who would pay for that while you are under contract?
You can negotiate it. It's all negotiating, it's just how going back and forth. Like, for me, why is the seller selling and what they plan on doing with the capital? That's kind of the thing. So for me, I'll buy it. There's ways that I'll buy it. Like if I'm buying it seller financing, sure, I'll buy it and I got to replace the roof, but I'm putting 0 down. And oftentimes I'll negotiate with the seller and say, oh, by the way, I want 3 months of no payments. So it's all negotiable. If I'm paying cash and I'm getting a discount, I'll probably offset it. And it depends on what the cost is. I mean, some areas a roof could be like $7,500 and some areas could be $40,000. So it depends. And also what kind of roof it is. So there's a lot of different factors that go into it, but it's all negotiable. But for me, if I'm buying it through seller financing, depending on the price of the roof, I may be the one responsible for it. But what I do is I will pass that on to my buyer. and I will sell it more like a handyman special, look for somebody that's handy with it. And I tell my buyer, typically I'm looking for like, you know, there's $60,000 down, but if you're handy, I'll just take $15,000 down instead, and then you can take that difference capital and put it into the property. So there's different ways of going about it, but that's one of the strategies I'll look at. So there's a lot more factors that go into it. And then also, why is the seller selling? And then, is there anything that maybe the storm caused something and so could be some insurance on it? There's different ways of going on it, but it depends on the deal. It really depends. So hopefully that answered your question.
Awesome. And then we got
Do they have it?
we
Yeah,
got a couple over here on Facebook as well
Go
that
ahead.
just came in. What is the best way to find buyers for seller finance properties when you are working with families?
A lot of times people, so you got to have a really good understanding here. If you're selling it to a buyer and you're selling it as seller financing, you have to be aware of consumer protection regulations. So you have federal, you have the Dodd-Frank, you have the Rest by the Safe Act, and then some of the states have, because you're also viewed as a lender too when you're doing that. So kind of keep that in mind. But if you sell it as a lease option or rent to own, then you're exempt. The other thing is, and you probably see this in the Facebook group, they're selling it to investors. So if you sell a property to an investor, then you're exempt from it. But so keep that in mind. But it's no big deal. Then you want to use a licensed RMLO, and the RMLO will make sure that they can qualify, and you want guidelines to follow because you do want to make sure that they're going to be able to afford it. But usually I will post it on Facebook Marketplace, Zillow, um, local groups of where the property is located. I'll put a couple bandit signs in the area. I will do that for a little while. And if I'm not getting any action from there, then I will post it on the MLS with one of the listing servicing fees. And then I anticipate I'll be giving 3% down to my buyer, to the realtor, I'm sorry, to the realtor's agent, which is fine. I try to get that from my buyer's down payment. So that's typically how I find my properties. Usually Zillow does really well. Zillow does well, and Facebook Marketplace does really well as well. I'm not, and so sometimes I will post it in, depending on if it's a lease option, I may post it under the rental section too. Hey, rent to own type of situation. So that's usually how I find my buyers. But remember, make sure they qualify. And remember, if you're going to be selling it as a note, you have to use, I recommend always using a licensed RMLO, because especially if you want to sell that note into the secondary market, if you use a licensed RMLO, you'll get more money for your note. If you don't use one, a lot of times people may not buy it, or they want it at a really huge discount. So
Not only that, Mark, though, you also have to worry about if you have to foreclose on it. If it's a legal situation, you could be, in fact, you can't enforce the lien at all.
yes, yep, 100%. So you do need to make sure, that's a great point, David, especially doing seller financing, because you need to make sure you have all the documents correctly lined up. And you want to use an attorney to kind of go through that process. But there's a lot of factors there that you need to be careful on that. That's why for me, I like to sometimes sell it on a lease option. But I do sell some of my properties. Like if I have a buyer, I'm selling as a handyman special and they're putting a lot of money into that property. I want them, then I'll sell it as seller financing because they should have what's called equitable interest in the property. Meaning if you have a buyer that's putting a lot of money into it and you do as a lease option and you foreclose and I'm sorry, if you evict them and they go in front of a judge and you had somebody put $50,000 into a home and they're not the owner, the judge is going to rip you apart. So then knows you'll sell it as I'll sell it through a seller financing. But you learn all this stuff. But as you're growing, you'll learn this stuff on the loan. And David hit the nail right on the head. There's a lot of different things when it comes to the seller financing when you're selling on seller financing. But it's not hard once you understand it. But you just got to be cautious because like you could get stuck and you can't foreclose on a property because the paperwork wasn't done correctly. And that can happen. It happens a lot, But Matt, you got any more questions?
Yes, we got one more. You ready?
I am. Bring it on.
I'm in the market to buy my first house in Dallas for my family, but we are having a hard time to finding them. What should we do?
Congratulations. Reach out to me. I may have some properties for you. No, but that is the truth. I may have some properties there for you. But So I would like call for sale by owner, Zillow. And remember, I don't know if you're in the beginning of the conversation, but when you're doing seller financing and you're talking to sellers and you want to do a seller financing, you have to remember it's a marriage. You're going to be in a long-term contract and commitment. So the reason why they're going to do a seller financing with you is because they like you, they trust you. So you want to build a rapport with them. So I always tell people, think of it the first time you went on a date with your significant other. You're 80%, you're just getting to know each other. So, and then I like the question, as I was saying before, would you be willing to rent the property to us for a few years and we close on it? And we'll take care of the maintenance and repairs. If they say yes, then I know they're open to terms. So and then also find properties that have been sitting in the market for a while. Then you know the seller might be more desperate. And maybe properties sitting empty where they could be carrying 2 mortgage payments. So I would recommend for sale by owner. And then depending on your down payment, you could go a realtor route. But I was talking about it earlier. I love going to rental realtors because a lot of times people are trying to sell their home and they couldn't sell it, so they switch it to rental. So in this market right now, it's prime for what you're trying to buy right now. I love this market for seller financing and buying rent to owns or whatever it may be because homes are sitting. There's more sellers than buyers. So you have a good opportunity to do that. But you know, reach out. I may have a property I could sell you. So all right.
Awesome. I don't see any more questions.
Got a few more minutes, bring some more questions. I like it. These are good questions tonight. You know, really good questions.
Oh yeah.
You know,
Feel free to drop them in the chat on Facebook or over here on Zoom. Feel free to unmute yourself and ask.
how about the one, what's going on with that one deal that we're helping your brother with? They're going through probate now?
It's going to take a while,
Yes.
but I don't know. We'll see. We'll see.
Yep. Can you tell by the background I'm in a Vermont home?
You're in a what home?
A Vermont home.
Oh,
Like, see how
no.
it's different.
He said he
So,
would love to buy one from you.
all right. Just have him send me a message and we'll kind of go from that. Just send a message and we'll see.
And I think, Mark, I think people also have to focus if they're a realtor. I think they just said you're the realtor. This is a great angle for people who are realtors because you're going to stand out from the entire crowd of other co-workers who know nothing about this field.
100%. A lot of them are coming on. If you notice, they call it unicorn. But yes, if you are a realtor, and I have people, realtors that come in just to learn it so they can make the money with their clients. So that is a good point, David, on that. So yeah, that's a really good thing because it's opening it up the whole door with realtors. Now, a lot of realtors right now, they're getting beated because everybody's just pitching subject to, but there's a lot more than just subject to out there. And they just want to make sure, but it is a huge angle. Like what David was saying, it's a great angle. Like if you understand how to do the seller financing notes, it's a win for everybody. It's a win for the realtor. You can make money, and you can. I know a realtor right now that's doing, God, I don't know how many deals a month, like 5 to 7 deals a month, doing the same exact strategy of doing seller financing. That's all she focuses on, finding properties, finding buyers, and then also like. You know, if you're an investor, loan officers are great with because some of these people are trying to buy homes. They have down payments, but they can't qualify. So have the loan officer refer those people over to you. So there's a lot of different ways of going about it. So I like it. You know, so many different angles going about it. So a couple more minutes. Do we have any more questions, Matt?
I don't see any more. Nope.
Okay. So it's a good one. So it's very good. I guess we can just kind of wrap it up if we have no more questions. You know, anybody else have any more questions before we wrap it up? We've got 2 more minutes here. If not, we're going to wrap it up.
Nope. Doesn't look like it. Well,
Okay. All
all
right.
right, guys. Schedule a call with us to see if if Mark's mentorship is a good fit for you. We're here to help you be successful and create wealth for you and your family. So,
All right, guys.
Mark, thank you. We appreciate you.
Great. All right, guys. Be well. Pleasure. Enjoy your evening. And we will talk to you guys soon. Let me learn. Now that I'm on my phone, I got to figure out how to shut down Facebook. It's all good.
You're still over on your computer.
Yeah, I see it running in the background. Otherwise, Stream probably wouldn't be working, I believe.
Correct.
I'm just sitting around and wait to see how long it takes you, Mark.
It's going to take a little bit. David, that was pretty good that you sent over. That was kind of
Yeah.
slick.
Yeah,
So,
I'll if you're around later, I'll give you a yell. But I got some more. I got some more powerful ones too.
okay, cool. All right, guys, take care. Be well.
Have a good one.
Yeah. All right, bye-bye. Whoops. I think we got rid of everybody.
Yep. Are we still live?
Nah, I don't think so. I think I shut it all. I shut Stream down. So I'm surprised that Facebook kept working, but Zoom was having issues.
Yes. I still see Facebook. So
You still see us up there?
yeah, I don't know if it's pretty far behind though.
It is. It was really lagging today. I have it shut off. You know what? I can, since I'm on my phone, I can just shut well, if you're co-host, right?
Well, it's tagged to Zoom, so
All right, I'm going to shut my browser completely down. You still there? I'm on my
Yep.
phone. So is that my phone calling? Oh. Oh. That's David calling me. Maybe because I booted him out.